Good morning, everyone, and welcome to Kotak's Trade Talk podcast. On Thursday, on the day of weekly expiry, we saw a spectacular rally in our markets. It was not at all expected that the market can break the level of 22,800 so easily without any major efforts. But the rally was decisive and almost all the sectors participated heavily in the up move. Mainly large cap companies like Reliance Industries, HDFC Bank, Infosys, they did well along with ITC, and that has actually helped the market to move higher. In fact, it was very close to the levels of 23,000 during the day, but from there it failed and it closed at 22,950, 960 levels. The overall structure of the market is indicating us that the market has broken the decisive level of 22,800 with a broader participation, which is positive, and it will help the market to move towards 23,500 to 23,750 levels in next few days or weeks. Also, we are going to face the major event of election outcome, so we can see the markets volatile, but the bias remains bullish. Broadly, we are of the view that in case if there is any correction in today's date, because US markets were down yesterday, and they were down mainly because of service as well as composite PMI. These numbers came above expectations, and again it is going to impact the interest rate cycle of the US. I mean to say they are going to keep the interest rate higher for a longer time, and that's the reason we saw profit taking in equity markets. Bond yield, which was around 4.4240 levels, is now at 4.49, and dollar index is again back to 105 levels. However, crude is still down and it is below the levels of 82. But overall performance of the US markets as well as global equities are not that supportive, but our markets are going to perform based on our own domestic macros as well as the outcome which is due in next few days. Strategy should be to buy on dips close to 22,850, 800 levels. We can expect or we can see some throwback in the near term from the higher levels. Close to 22,850, 800 levels, try to look for adding long positions. In case if the market breaks 22,800, then the possibilities of hitting 22,600 would turn bright, but that will be again an opportunity for adding some positions with a medium to long term view. But for traders, 22,600 should be the final stop loss for holding any long position. For the Bank Nifty, there also we saw spectacular move. It was mainly because of HDFC Bank as well as participation from few other private banks. 48,700, 750 was the closing. Now the next level to watch out for would be 49,000, 49,050. And in case if there is any correction, then close to 48,300, 400, the Bank Nifty is having excellent support. So between 48,500 to 48,300, we should look for adding bank stocks or Bank Nifty to the trading portfolio. Metal stocks were under pressure yesterday, and also we saw some profit taking in PSUs. But private banks as well as big corporates like Adani, Ambani did really well along with Tatas and Birlas. So there we can expect further more momentum. From the metal basket, we like steel companies, in that specifically Tata Steel as well as Steel Authority should be on the watch list along with Jindal Steel and Power. Based on their technical patterns, we can expect further more up move. From the cement space, ACC Ambuja did well, Ultratech was doing well, but overall we are of the view that along with commodities, we can see some activity in FMCG companies. For IT companies, again, it will be not that positive day. It should not be positive day because the bond yield is again at 4.50 and the possibilities of rate cut is delaying. So that will impact IT companies. But if there is any momentum, if there is any activity in IT companies, then TCS should be on the watch list. That's all from my side. With this, I am ending today's morning podcast. Thank you very much for listening me and have a great day to all of you.